Well, my take is that when I look at a market, especially the pound or the gilts and how they're behaving in deference to all that has occurred regarding the vote and its large failure, I don't see that the market is where you look to find the answer. What is being divined by the markets right now is what expectations were versus what the reality is. And in my opinion, most investors didn't really think that this would pass, and it certainly wouldn't pass within 100 votes, and indeed it didn't. So I think investors mostly had the outcome figured out. As for the bigger picture, I know that Wolf went through a variety of permutations that was put forth. I can't remember who it was. Maybe it was Deutsche Bank. But in the end, I think the overriding issue is whether it's a hard Brexit or not. I think most investors just do not want to see another referendum, and I think that's actually low on the list. That would be my kind of scenario to gauge markets moving forward. Should they start to go more negative or positive? I think that really is the issue. I think many in the financial markets believe that there's going to be volatility in the short term no matter how it turns out. But really, it's the larger picture. Will the UK be better off going it alone? And I think many investors think the answer is yes, just like the people that participated in the first Brexit vote. As far as interest rates or foreign exchange, neither of these markets have really given us an extension of the range up or down to give us any big clues to the wider answer to the question of Brexit.
I think the only thing I'd add to that, Rick, regardless of what caused today's intraday rally, we are still down on the day, and we're still down sharply year to date. So it's not like we're celebrating all risks related to Brexit passing. Kate, when we consider this as the bigger picture, Brexit, slowdown in German and French industrial production for this quarter, China stresses, do you think that there could be a big global slowdown this year that's not yet priced into U.S. equities?
No, I think overall we're seeing signs of slowing, but I don't think they're sharp enough or significant enough to suggest that we're going to see a bigger global slowdown. I think we're already seeing signs that Brexit uncertainty is causing both the UK and Europe to slow, as both sides worry about what that means and what the outcome could be. As Rick suggested, the expectations were that this vote would be a defeat. But I think that overall, everyone's hoping that we don't see a hard Brexit, because that would be worse, and that would be something that would lead in the direction of more slowdown. But overall, the signs are suggesting that things are beginning to sort of flatten out, and that we may have seen the worst of the declines. Certainly we heard that from Draghi this morning, as he suggested that even in Germany, we didn't have December data, and therefore the slowdown there may not be as bad as everyone's thinking now.